the sort of bleak picture that we're looking at, are there opportunities? Where do they exist in the economy?
You know, if we look back to 2022, 75% of U.S. stocks are trading at a discount to where we were before a lot of this craziness occurred in 2022 with a bear market. And again, going back to technology stocks, they've kind of paved the way for much of the growth we've experienced last year. I mean, and honestly, quite frankly, since 2009 after the Great Recession. So there's this story, it's not brand new, but there are ways to buy the US economy equally versus in a tech-focused way or a tech-heavy way. The S&P 500 by nature is dollar weighted. So the Magnificent Seven stocks make up a majority of the S&P. The technology sector of the 11 sectors in the S&P technology makes up 28%. So there's just a huge overweight in tech. So as the economy reopens, if we do believe there's a soft landing, that is important in this example. There's the belief that the companies that haven't appreciated nearly as much as these tech companies over the last several years should outperform.
Lastly, what solutions are Stonebriar providing with clients in the midst of this market uncertainty, geopolitical uncertainty? How are you helping them to navigate the waters?
So right now, momentum is alive and well. The path of least resistance in this market is for it to continue to melt upwards. It kind of started last year when sentiment was low. Just at the beginning of October, it seemed like we weren't going to get past this inflation issue. The Fed was still on the wrong side of the rate cut and rate pause discussion. But heading into the end of the year, things like artificial intelligence, of course, paved the way, but we started to see a broadening of the rally. We started to see the stocks that were left behind, financials, industrials, small caps, which often are more sensitive to a reopening or a catch-up type of phase of a market rally. We started to finally see those stocks start to rebound too. So right now, the path of least resistance is up. If we're getting Goldilocks data, there's not a whole lot different for us to do than stay balanced. It's hard to ignore growth, but having something that should grow outside of tech and something that has, and including sectors that have been forgotten about, I think is very important. Fixed income is probably the most attractive it's been in years, given that the Fed, first of all, rates are high, and second of all, rates are going to come down, which is great, right? If interest rates come down, bond prices go up. So an increase in bond exposure, an increase in just diversification away from tech, including a little bit more small and mid-cap. Honestly, if things continue the way they are, international had a really good last year as well, and that could continue into this year too.
Joe, thank you so much for taking the time to share your view on 2024 and beyond. It's going to be an interesting year, and we appreciate you educating our audience.
There's never a dull moment, and I'm always happy to come on and talk about it with you, Jillian. Thank you.
And thank you for tuning in. From our studios in New York, I'm Jillian Kemmerer for Asset TV.
Stonebriar Wealth Management, advisors for your life.
This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance and is not a guarantee.